What if I told you there's a stock that pays investors every single month? Not every quarter, not twice a year, every month. And right now, it's offering a dividend yield of around 6%. Today, we're looking at one monthly dividend payer that's been rewarding shareholders for decades and could be worth a closer look. Let's dive in. The stock we're talking about today is Realty Income, ticker symbol O. In fact, Realty Income has built its entire brand around one simple promise: consistent monthly income. The company even trademarked the phrase the monthly dividend company. Since going public in 1994, Realty Income has paid more than 650 consecutive monthly dividends and increased its dividend over 100 times. That's an incredible track record. But before you rush out and buy shares, it's important to understand exactly how Realty Income makes money and why it has been able to maintain such a reliable dividend.
The basics of Realty Income, the basics of Realty Income as a REIT. Resilience of the business model. Convenience stores, pharmacies, dollar stores, and other essential business chains that remain operational through economic shifts.
The key advantage is that most of these leases are structured as triple net leases. That means the tenant, not Realty Income, is responsible for property taxes, maintenance, and insurance costs.
As a result, Realty Income collects predictable rental income while keeping expenses relatively low. This creates a steady stream of cash flow that can be distributed to shareholders in the form of dividends.
The key advantage is that most of these leases are structured as triple net leases. That means the tenant, not Realty Income, is responsible for property taxes, maintenance, and insurance costs.
As a result, Realty Income collects predictable rental income while keeping expenses relatively low. This creates a steady stream of cash flow that can be distributed to shareholders in the form of dividends.
There are three main reasons investors are attracted to Realty Income. First, the monthly dividend. Receiving income every month can make budgeting easier and allows investors to reinvest dividends more frequently.
Second, diversification. The company owns thousands of properties and leases them to hundreds of tenants across multiple industries. That reduces the impact if any single tenant runs into trouble.
Third, reliability. Realty Income has survived recessions, market crashes, interest rate cycles, and economic slowdowns while continuing to pay dividends.
That's exactly the kind of resilience many income investors look for. And with a yield around 6%, investors are being paid significantly more than the average stock in the S&P 500. Of course, no investment is risk-free. One of the biggest risks for Realty Income is interest rates. When rates rise, REITs can face pressure because borrowing
becomes more expensive, and income-focused investors may find alternatives in bonds or savings accounts. There's also tenant risk. While Realty Income's portfolio is highly diversified, some tenants could struggle during economic downturns. And finally, investors should remember that a 6% yield is attractive, but share prices can still fluctuate significantly. That's why it's important to view Realty Income as a long-term income investment rather than a quick trade.
So, is Realty Income the perfect dividend stock? No stock is perfect. But if you're looking for a company with a long history of paying monthly dividends,
A diversified real estate portfolio, and a yield that's currently around 6%, Realty Income deserves a spot on your watch slate. As always, do your own research, consider your risk tolerance, and never invest based solely on a dividend yield.
But when it comes to monthly income stocks, Realty Income remains one of the most well-known names in the market. Would you buy a stock that pays you every month? Let me know in the comments below. Like, subscribe, and hit notification investing content. Thanks for watching.